All right, so we'll get started. Hello, everyone. My name is Alyssa. I'm a peer financial coach with the Financial Wellness Center. And welcome to Financial Literacy Month, which is the month of April. So, with that being said, we'll get started. So, with that being said, a little bit about us and our mission. Our mission is to financially empower students with the knowledge needed to make sound financial decisions during and after college. We work together with students and organizations to provide skills and tools to be financially empowered to make decisions during school and post school. So, here's our foundation. We call it the Big Five. The big five are the earning, spending, borrowing, protecting, saving, and investing. So with these, we call this the foundation. And if you have skills and knowledge in each area of this financial wellness, you should be pretty set and good to go. So we focus on budgeting, managing the inflow and outflow of your money, borrowing such as student loans, credit cards, credit scores, protecting your financial wellness such as identity theft and fraud, and then saving and investing in your future, which is strategies like retirement funds and all that good stuff. So that's a little bit about what we do and what we work with and help students with. So, how we reach you all, we do on demand financial education workshops. We work with groups like Beta Alpha Psi and other on campus organizations to do tailored workshops that help meet the needs and criteria of each student on campus. We offer one on one peer financial coaching. This is all virtual right now. We have 20 different coaches here who are more than willing to work with you and your specific situation and give you a game plan to get started on your financial wellness. And then we're always building partnerships across campus with other groups and programs and looking forward to just spreading this information and helping everyone have a strong foundation in financial wellness. So, like I said, Pure Financial Coaching, that's one of our biggest platforms here. Please visit our website and schedule an appointment. You can talk one on one with a Pure Financial Coach about any of these topics. Appointments are available for all of spring term, and we're super flexible with timing. So, please feel free to reach out if you have any individual questions. We're super excited and happy to work with you all. And then last but definitely not least, I'd love to introduce Jeffrey and Taylor. They're here to talk all things taxes, which is can be crazy, but they totally break it down and make it easy and understandable. So listen up, you've got a good duo here. So with that being said, I'm going to pass it off to Jeffrey and Taylor.
All right, so I'm Taylor and this is Jeffrey, and so we're going to be doing the presentation today. All right, so Beta Alpha Psi is a professional accounting fraternity on campus. So we basically just do accounting things and hang out. And so we're specifically from the VITA program, the Volunteer Income Tax Assistance Program. So basically every year we get together and we open up and we just do taxes for people. So me and Jeffrey are both seniors, so we did VITA last year. We're both seniors in accounting, and so just a little disclaimer, we are still students, we're not paid professionals, we don't have licenses, and that's kind of the speech we have to give to everyone when they come into our program. So just a little disclaimer at the beginning there. And then here's Jeffrey.
Yeah, so hey, I'm Jeffrey, as Taylor said. I'm a senior accounting major here, and I've helped out with VITA before. And one of the most common questions that we get is, do I actually need to fill out a tax return? And this can be a little more complicated on face value than a lot of times people think it is. So the first thing, I'm going through a slightly wrong order, but the deadline this year actually has been pushed out from April 15th, 2021, which is when it originally was, to May 17th, 2021. So that is going to be beneficial for a lot of people during this pandemic to just get everything in order. And if you haven't filed yet, it's okay. You don't need to panic. You have until May 17th. So now, going back to what I was just touching on, who should file? So it's not just based on how much money you made this year. There are three common scenarios that we see of why someone should file a tax return. So the first one is if you can claim a refund for taxes that you already paid. And breaking down the accounting jargon in this, what this really means is that, as we've all seen, when we get a paycheck, part of that is withheld by your employer. So sometimes your employer actually withheld more money from your paycheck to account for taxes than you were supposed to pay. So you're entitled to get that money back. So that's one of the common scenarios that we see. And the best way to figure out if this applies to you is to start doing a return and see if it looks like you're going to get a refund. Secondly, and this one's a little more straightforward, is that you are entitled to specific tax benefits. So in VITA, the main ones that we're usually looking at are the earned income tax credit. Really what that is it's a really great benefit for working families who often have children. And the credit goes up the more children you have. So it can be really beneficial. And secondly, credits for childcare. If you pay for childcare, there are tax benefits that you are entitled to if you're doing that for work. And then lastly, which is probably going to apply to most everyone here, is education credits. If you are paying for school, there are tax benefits that you are entitled to. So it's one of the common things that we see is that people don't file a tax return because they don't think they need to because how much money they made, but they're actually entitled to these education credits that we'll get into later. And then this year, an interesting little wrinkle is the recovery rebate credit. It sounds very complicated. Basically what it means is that if you didn't get as much stimulus you were entitled to, whether that's they just didn't send you the check, didn't get direct deposited right, or maybe something in your finances changed where you should have gotten more money than you were supposed to, that's how you're going to get that money this year. You're going to file for that credit. The government is going to include it in your tax return. And then lastly, this is the most straightforward one that people usually think of. You have to, based on how much income you make. And so here you can see that if you are a single person and if you were under 65 and you made more than $12,400 or that amount, you have to legally file a return. The important thing here, again, to keep in mind is that this is only the legal minimum baseline. There are a lot of other reasons that we just touched on where it may be beneficial for you to still file a return, even though you made less than $12,400 or whatever the amount is for your specific filing status.
All right, so one big thing for students is, are you still a dependent of your parents? So not necessarily, or not necessarily that you're independent. So if you're living on campus, if you're living away from home, you're probably still considered a dependent of your parents if you're under the age of 24. It's also important to note that being dependent in terms of taxes is different from being independent, like in terms of like the FAFSA and like financial aid information and stuff like that. So as long as you're under the age of 24, you're probably still going to pay your parents' taxes. Any time spent living away from your family while still enrolled in classes counts as living with your parents in the state that they're in. So make sure that you're keeping an open dialogue with your family about finances and about all of this information.
So another common one that we hear, what do I do if I cannot afford the tax that the government wants me to pay? Am I going to jail? The answer is no. You're not going to jail. We can assure you of that. You only go to jail if you knowingly commit tax fraud. So don't do that. And the best option is to still file a return. It's never a good option to not file. That's just, you should not do that. If you legally have to file, always file the return. And what you want to do though, is that when you file that return, you want to pay as much of that tax that you owe as you can. The reason for that is that you're going to have to pay interest in the future on the amount that you cannot pay at this moment. So the more you pay now, the less you're going to pay later. But another really important step here is that you cannot afford all of the tax that you owe, you should contact the IRS directly. Their phone number is there on the screen. That's the best way to reach them. And the reason for that is that they can offer specific payment solutions for you that are going to help you. The two main ones are settlements, which means that you're actually going to have to pay less taxes than you owe. So say, for example, that your tax return said that you owe $10,000 and you can only pay $2,000 of that right now. So you've paid $2,000 of that $10,000 now. So there's $8,000 still left over. The IRS may just say, we don't think we're going to get that $8,000 from you. So give us just $3,000 and you're good. That will occasionally happen. So you can actually pay less if you talk to the IRS directly. Now, last little disclaimer, can seem very appealing to contact for-profit groups, especially with their very aggressive ads that you see on TV a lot of times to help you settle your tax burden. A, that's probably way too complicated for most students. And B, there's a lot of free options that you can find on the internet or just in local advertising in the community that will help you with the IRS. But again, best policy. Just go to the IRS directly. They'll work with you. So now, another fun one. What documents do I need? This is like the minutia of the minutia that is tax. And so for each person on the tax return, you're going to need some very specific information. First one is going to be, and this is very obvious, you're going to need their name. You're going to need other identifying information with that, such as their birth date. And you're going to need everyone's social security or tax ID numbers that you're going to claim. And so the second one there, you may not know what a tax ID number is. If you don't know what a tax ID number is, that's fantastic, because usually we see tax ID numbers when there's been identity theft. So if you don't have a tax ID number, you're good. Don't worry about it. And lastly, banking information. The person who is filing the tax return needs to list their routing and their account numbers on the return so that the return can be direct deposited, which is what most people do. Now, that doesn't mean you have to list for everyone on the return. If a parent is filing a return and they want to include their 3 kids, they do not need to include little Johnny, who's a 3rd grader, in their bank account information. And so secondly, and this is where we see most people will get tripped up with documentation, is in the financial information that you need to provide. So really broadly, what this breaks down to is documents that relate to income and expenses. So the most common documents that you're going to need to provide to do your taxes are a W-2. What the W-2 is it's just the form that you get from your employer if you go and work a normal job, if you're being paid for an internship. Most of you have probably seen one of those before. And then the second category, which gets a lot murkier, but is becoming more and more common, is 1099 forms. Now that's a really, really broad categorization because it can include anything from interest on your bank account, say you made some money selling stocks, maybe GameStop, who knows, or you had some self-employment income, like you were a social media person, or you were driving for delivery apps like Uber or Lyft or Grubhub. And the reason why those delivery apps would fall under the 1099 is because people who work for those apps are technically listed as independent contractors most often. So that's why they would get a 1099 over a W-2. And then lastly, we have the 1098-T, which Taylor is going to explain in more detail earlier. But basically, that is what is going to provide you information as a student about your taxes regarding your scholarships and some of the expenses you paid for school. So I see a question just popped into the chat. Is there a difference between a 1099 and a 1099 NEC? Yes, the 1099 is going to be a form of the 1099. So it's going to be like a subdivision. Like 1099 is very broad. Like we said, there's a whole host of forms. And so, yeah, a 1099 NESC would fall under that same category of Form 1099. So you just follow the instructions for that specific form. What if I don't have a W-2? This is another one that we run into a surprising amount. Number one thing to remember, it's not your job to write your own W-2. You cannot legally do that. It's your employer's job. So the first thing you need to do is make sure you didn't lose it, because that can be very awkward. If you go ask the employer, hey, where's my stinking W-2? And they say, we sent it to you, check your email from a month ago. So check, make sure that you didn't just lose it. But if you didn't, and they're still being a pain about it, and they won't give you a W-2, contact the IRS. You may see a theme is starting to emerge that communication with the IRS is always better than not. And again, another theme is emerging. You still have to file a return, even though you may be missing a W-2. And so the form that you're going to use for that is Form 4852. That's basically going to let you enter it in as a substitute for the real W-2. And I would recommend that if you think this may apply to you, to write that number down, take a picture of it, because Form 4852 is very hard to remember, to be quite honest. If you probably asked me on the street what form I needed to fill out, I probably wouldn't know. So if you are going to be in that situation, I would take note of that now. So head of household status. This is one of my favorite things that we get to do at VITA when we see that it applies to someone. This is a benefit that's built into the tax code to help individuals who are not married, but who still care for dependents. And what this most commonly is single parents is what we see most often. And something that a lot of people don't know about. because it can be kind of scary. You're in your tax software, you see like single, married filing, jointly married filing, separately, head of household. What in the world is head of household? And basically just think single parent is how you would usually see that be. And what it basically does is allows you to claim what's called a larger standard deduction. So breaking down the accounting jargon, again in that, basically what that means is that you will either get more money back from the government if you're getting a refund, or your tax due will be less. And the reason for that is that your standard deduction is going to be $6,000 higher if you file as head of household versus filing single. So it can be a big difference for single parents, especially. Another one that we get occasionally, less common, but is about Dreamers and international students. So another disclaimer here, we typically do not handle Dreamers or international students at VITA because those can be more complicated scenarios that we are not trained for, but we can provide some basic guidance on some of the steps you're going to need to take. So most likely you're still going to need to file a tax return. So the reason for that is that that a US tax return can need to be filed if you received scholarships or if you earned income in the US, which is going to apply to many international students in particular. In order to file that return, you're going to need to file Form 8843. That's going to help you determine what is taxable by the US government out of your income that you earned that year. And then lastly, anyone who is enrolled in DACA has to file a tax return. So if you're in that program, you got to file a return. But really important, if you fall into one of these buckets, consult a professional because things can get more complicated and it will be beneficial to have someone who can help you through these steps. How are we all doing? Any questions right now? It's burning. Criticisms of me? Sounds good.
Right, so let's jump into the tuition statement. So the 1098-T is the form that everyone should be getting from the university, any university you attend. So if you're in the dual enrollment program, you should have one from both schools, or any school that you attend throughout the year should be sending it to you. And basically it just lists out how much tuition and expenses you pay directly to the school and how much scholarships and grants you got. So I highlighted the two boxes that are kind of the most important. You definitely don't have to know what the things on this form do. You just have to know that you have to put it into the software. That's pretty much the most important part of any form, honestly, for taxes. As long as you know how to read box number 1, box number 2, and put it in, you should be good. So if you're dependent, then your parents are going to claim this one. So they're going to input it in their taxes. If you're not a dependent, then you'll put it in your taxes. And you do have to have this in order to receive any kind of educational tax credit. So if your scholarships and grants, so your financial aid that you received, if you received more financial aid than your tuition cost, then you might have to actually pay taxes on it. But if you paid more out of pocket than you did receive in financial aid, then you might get some kind of a tax credit. So if you don't know where to find it, this is where it is. If they don't send it to you in the mail, I think they're supposed to, but if you don't get it, you can check on the student menu on DuckWeb, tax notification right there, 1098-T, just on the first page of the student menu. And if you're a student worker at the U of O, you should be able to find your W-2 in the employee information tab, by the way, just as an aside. And so here's, okay, so the 1098-T includes, oh, I think that's a question. Sorry. Is it probably filed if your parents will? No, so you and your parents can both file. You would just only include the 1098-T on one of the two tax forms. Yeah, so you can't, because if you double count it, you could be getting like double the credits or something like that. But you can definitely still file if your parents used it. Yeah. Okay. So on the 1098-T, it only includes the expenses that were paid to the school directly. So you guys probably know you pay for your books at the bookstore. So that's not included in there, but you do want to make sure that you're including that because that is a necessary like course related material that you have to have in order to be going to school. So just read the instructions very carefully when you're filling stuff out, and make sure that you have kind of an estimate of how much your books cost for the year. And you can input it there and get the benefits from it. If you spent money on room and board, that actually doesn't count towards it. So you want to make sure that you're not counting dorm expenses, even though you might be required to live in the dorms. That doesn't count as like a required course related thing. So some of the credits that you could be eligible for using the 1098T is the American Opportunity Credit. So this is the best one that you can get, and you can claim it for the first 4 tax years of your education, and you should be claiming it, you or your parents, whoever is able to claim it. And so basically it's up to a $2,500 credit. And so what that means is that basically you go through your entire return, you fill everything out, you get to the bottom, it says, okay, you owe this much money. And then this credit comes in and it says, no, you owe $2,500 less than that. And if that is able to be refunded to you, only 40% of it is refundable, which is not the full amount, which isn't fun, but it's more than nothing, which is great. It used to be known as the Hope Credit, so if anyone's heard of that. But in place of this, if you have gone to school for over 4 tax years, then you can take the Lifetime Learning Credit. So basically, it's got all the same requirements. It's just anytime after you're in 4 years. So if you're getting a master's degree or something like that, or if you just take a break from school and you're coming back, you can do this. And so it's just only up to $2,000 credit, and it's actually non-refundable. All right, and so then what forms do you need to fill out? So you need to fill out a Form 1040. This is the main tax form that you're going to be filling out. If you're using a tax software, it'll fill it out for you. It'll just ask you questions and fill it out for you. And you can file it either electronically or by mail. So sometimes they'll try to charge you extra to be filing it electronically. So if you can just print it out and mail it in, that probably might save you some money. So just knowing that you can do that, even if you're using a tax software, is good. Yeah, in some specific situations, you might need to fill out some other forms, but more often than not, it's just the 1040, especially for students who have pretty simple returns. That's what you should be focusing on. Okay, so the University of Oregon has a lot of out-of-state students, obviously. So if you're coming from California, if you're coming from Washington, if you're coming from any other state, and you're working in Oregon while at school, you do probably still have to file a tax return in Oregon. So you have to pay Oregon taxes on the income that you made in Oregon. It'll probably be a non-resident tax return, but you are still technically a resident of the state that your parents live in the eyes of the IRS. So you will have to file there as well, probably. Oregon's just kind of weird because we have like the income state taxes rather than sales tax. But yeah, you should definitely check, make sure you're checking every box and reading all of the things when you're going through filling out your actual taxes, because it will help you through figuring out which states you need to file in. All right, and if you have any student loans, you can actually deduct some of the interest. So definitely keep track of how much interest you're paying, even if you're still in school and you're paying interest on your unsubsidized loans or something like that, or your parents are probably more likely to take this. So you can take out up to $2,500 of interest as a deduction. And they should send you a 1098E form, so that whatever your loan servicer is should be sending you a form with that. You just input it.
Okay, the stimulus checks. This is probably the biggest wrinkle in taxes this year. And everyone's like, what in the world am I doing with these checks that I'm getting mailed to me from the government? Well, in Oregon, we kind of have a good news, bad news scenario. The good news is your stimulus checks are not taxable on your federal return. So that's fantastic. The bad news is Oregon has a glitch in its tax code that is causing the stimulus checks to be taxable. The reason for that is that Oregon is one of the few states in the US that allows you to deduct what you paid in federal taxes from your state taxes. So what that's causing is this stimulus check to actually be taxed this year. But again, no disclaimer here with it. It's very complicated in Oregon. There's legislation coming that is going to be passed soon, it sounds like. And what that's going to do is it's going to basically reverse this. It's going to make sure that the stimulus does not get taxed, but it's likely going to take a few months for this all to be put into place. So what I would expect, and this is my opinion, is going to happen is that people are going to file their state returns, pay tax on the stimulus check, and then get the money sent back to them later. It's not the best, but it is, if I had to classify it, the stimulus checks are taxable in Oregon for now, but that could change, or you could just get it back later. But again, with the stimulus checks also, as we touched on earlier in the presentation, it's really important to pay attention to actually making sure that you received the amount that you were entitled on your first two stimulus checks, because not everyone did. Whether, again, that's your income situation changed or you just didn't receive the check, it's really important that you check for that. And most of the tax softwares will do that. They're asking you this year how much you received for your stimulus checks and comparing that to what your income and life situation dictates that you should have received. So again, as Taylor said, do it in tax software. Do your return in there. It's going to make your life so much easier. I would not do it by hand myself. And then, so next we'll get into how much should you actually have gotten. Again, I would use tax software because we'll do all the math for you. It'll figure out exactly how much you're entitled to. But an important thing here is that there is an income phase out. And basically, that's accounting jargon for if you make more money, you're going to be entitled to less of the credit. And I believe the income phase out begins to happen at $75,000. So this is not something that's going to be applicable to most students, but it's just a disclaimer to put in there. Your first stimulus check, for most people that were single, you should have received $1,200. For your second stimulus check, you should have received $600. Now, if you're married, filing jointly, you can just double that amount. If you were filing jointly and you made less than, I think, $150,000, because we were just, again, multiplied by 2, then you would receive $2,400 on the first stimulus check and $1,200 on the second one. And as you can see, you get a bonus if you have kids on your stimulus checks. The first one, you would get $500 for the kid. And in the second one, you would get $400. So that's, again, a nice benefit to be on the lookout for if you're a parent that the IRS may not have, for some reason, known that you had that kid, especially if they were born this year, and you are entitled to that money.
All right, so the big question, where can I file my taxes? So the IRS does have a free file online lookup tool. So if you just like Google like IRS free file, they'll have like a thing that you can go through and just answer the questions and it'll send you to a site. TurboTax has a good program. I think I filed mine with TurboTax this year. And then Free Tax USA is also another one. Honestly, since if you're a student and you have a simple return with like 2 documents, you really don't need to be, you don't need to pay money for anything. You should be able to get it for free. So if something tries to charge you, definitely look into it and make sure that like you clicked the right buttons. See. Oh, okay. I think I got a message privately. Okay, so it says, do tax filing dependents get stimulus money or is it just parents? So if you're a dependent, I believe the stimulus money will go to your parents directly. So if they did that. Okay, yeah. So you shouldn't be charged to do your taxes. Sometimes it will try to trick you and you need to be careful and make sure that you're like clicking the right boxes and everything. Because you should be able to do it for free. And you can also use VITA. So this year, unfortunately, we weren't able to do VITA in person, but OSU is doing VITA online. And there's a little QR code, so if you want to take a picture of that or use that, it should work, I think. Yeah, so that's a good option. But usually VITA's here every year. Come winter term, we're usually set up in Willis. So if you keep an eye out for that, you can come and have us do your taxes for free. All right, and here is our email. So if you have any additional questions, if you have any questions now that you wanted to ask, go for it.
Awesome. Thank you so much, Jeffrey and Taylor. Does anyone have any questions?
Not talking about tuition or room and board, but just like the books and the supplies, the course stuff. How do I know, or how can I find out if that can be like refunded in my tax, if that makes sense?
So I don't think it would be necessarily refunded, but you could use it as saying like it's the same as tuition. So if you paid for it out of pocket, then you could include it as an expense required for school. But it would still only go up to the amount of the tax credit. And usually, like, I wouldn't worry too much about getting specific numbers because they don't usually, unless you get audited, they won't necessarily check, but like just keeping track of rough numbers.
Yeah, so basically what's going to happen when you go into this tax software to enter one of these credits, it's going to ask for two things: how many qualified education expenses you have, and how much you received in scholarship and grants. And so those things like supplies, you can include that in that number of qualified expenses that you have. The general rule of thumb is if an average person can use it who's not a student, it's not a qualified education expense. But anything else that a regular person would not use is a qualified education expense. So for example, when we talk about why rent is not included in that, it's because most everyone needs to pay rent or pay their mortgage. So that's something that an average person can use. Whereas if you go buy a intro to accounting textbook at the Duck store, the random person on the street has no use for an intro to accounting textbook at the Duck store. So that's why you can include that. So it's really what to focus on is not so much if you're going to get it refunded to you, but can it be counted as a qualified education expense, and then knowing how much you received in scholarship and grants.
When you count something as an expense, does that mean that it's not taxed?
Yeah, so you won't pay taxes on the expenses. You only are going to get taxed on your income. And so what the expense does, that's a good question, is it just entitles you to more of the credit that Taylor talked about. So I'm guessing if you're an undergraduate student, it would most likely be the American Opportunity Credit. It would just help you get more of that money. You wouldn't get taxed on your expenses. That would be really awful.
If we make below the threshold of 12,400, then we do not need to file a tax return.
Yeah, for 2020, you don't have to file, but if you did work and you made like say 12,000 even, you probably should file because your employer probably took money out of your income and put it aside to pay taxes. And you can get that refunded. So you can get that money back if you file. But if you don't file, then it'll just be like lost. Like it'll just belong to the government now. But yeah, so you don't have to file until you make over 12,400. But usually it's pretty smart and it doesn't really cost anything. So we usually recommend filing if you can.
Thanks, Logan. That was a good question.
Yeah, and for basic stuff too, you can just start a tax return and kind of see how it's looking even. And if you're actually going to get money back, we do that at VITA sometimes. People will come in and they're like, I don't know if I should file or not. And so we say, okay, we'll go start one for you. We'll see how it's looking because they're under the income threshold. They don't legally have to. And then we'll determine if we actually want to file this thing.
Sweet. Well, thank you all so much for coming. It was so nice to see all your faces virtually.